right, what's going on, everybody? Chris Franks with TexasWest Capital. I got Tillman sitting in the wings, ready to jump on here, man. He's ready to make you guys smile or hate him, or he just wants to evoke an emotion, guys. We're not, immune to the idea that sometimes the things we say are upsetting, but it's never without the understanding that we are holders. We do cold wallet our own Bitcoin, but again, the idea here is to help you and see how you can maybe better what you have in your understanding of Bitcoin and maybe where it's going within TradFi. So we're going to pull up for a minute. Andrew's busy, so it's just going to be me and Tillman today. Hopefully y'all are all right with that. Before I pull them up here, please go ahead and hit the like button, hit the subscribe, follow me wherever you're following us. You can follow Tillman at TexasOL61 there on Twitter, X. You can follow me at TXWest Capital, and you can follow Andrew, who's not here today, at AP_abacus on there as well. Again, guys, we're here to do you right. Hopefully you get that. What's going on, my man? How you doing?
Hey, I'm doing good. How are you?
Man, I'll tell you what, just living the life, right?
I'm blurry again. I need to try to get this thing cleared up. I don't know what the deal is. Maybe
it's every
the
time.
lighting.
See, and it's not because we have Andrew on here. You said last time.
I know. I thought, yeah, exactly. I don't know what's going on. Let's see if it clears up, though. Yeah, doing really good. I just, a little bit of an allergy season over here for me, which is always fun to deal with. But other than that, can't complain.
Well, I come from basically West Texas, there, San Angelo, and that's huge. We got the three different regions all coming in with mesquite, and oh man, that used to twice a year I would look like I'll be serious, guys. I was on drugs. My eyes were all red and puffy or whatever, and
it's the cottonwood here for me. When the cottonwood starts blooming, we've got about 50, 55 degree weather, which is it's great, but it's all the plants think it's great too. So, yeah, exactly. Yeah. I feel better than I look.
Well, I'll tell you what, I followed that. I had that issue up there in Lubbock as well when I was in law school, and then dealt with the cotton up there, But then, man, moved down to, San Antonio and Bernie. Man, I was great for the first time in years and years, decades. No allergy issues really at all. Down here, very, very sparingly down here around Houston. So, man, I can't complain. I can't complain right now. But anyway, I don't think people really care about our allergies, though they should, because we're human beings and we're suffering.
Listen, I need some care packages and some get well notes and, some positive vibes coming my way.
That's it. So anyway, yeah. So, title of the show today, basically asking, listen, social media, Bitcoin is just basically sentiment is in the dumps. It's basically just crap sentiment. And so, the question is to people watching, do you have paper hands? And what we mean is, one, are you emotional? Are you scared out with your emotions because you don't really have a plan? You don't understand what's going on. You're getting caught up in all the noise, especially if you're on social media. Or two, paper hands also means, are you a short time frame trader? Because either one of those things, the idea here, guys, is listen, we've got this pullback, we're accumulating, excuse me, and what the accumulation tries to do is it gets all that short-term traders, emotional traders out, that gets their supply out into the strong hands to hold it so it doesn't come back in and slow down prices. It finally rallies and breaks out to new all-time highs. And I did this thing, man. Last Friday on my show and then this morning on Scott's show, I said, listen, when I'm counting this looks like wave 2 of 5. And so, 5 waves is a cycle. And if it is, what that means is, without really stretching it, 5 waves is going to get us up like $365,000 Bitcoin. How do you feel about that?
I think I agree. I don't think we've come close to, I think this mirrors every other cycle. There's massive drawdowns in the bull run, especially at the beginning of it, because there is a new set of big buyers that need a position. Yeah. And it's if you don't believe that Bitcoin has changed to a Wall Street based bet, then why the correlation with Wall Street? If there's no, if it's not, it wouldn't be correlated. It is correlated to the macro thesis, and so Trump is doing things that are causing a upheaval and uh, panic in a lot of the markets. That is also going to get us to lower interest rates. So there's kind of, in my mind, a method to the madness, and um, lower interest rates are the biggest driver. That's the biggest lever in the room. If you
Yeah.
lower interest rates, money flows everywhere from every bank to, basically every endeavor you can think of, real estate, growth capital, like any business endeavor. That's where the driver is. And 5.5% is kind of a magic number that everybody, especially in the commercial real estate space, looks for. And the further you are beneath that, the more borrowing that's going to take place, and the higher leverage that people are going to go for as it pertains to real estate development. And that's the biggest driver in our economy, in my opinion. And so I think there is a short-term pain that's being experienced because markets don't like it when there's uncertainty, and there's a
Yep.
lot of uncertainty right now.
Yep.
Um, but uncertainty also provides the advantage to the people who aren't caught up in the moment's emotion and are looking at the longer term and the greater thesis. And so, let's take a step back, stop reading the headlines. The headlines are meaningless in a lot of cases. Honestly, a lot of them are deceptive in their titles.
Yeah.
They don't even they're not even true at face value of the title,
Yeah.
much less the details that then fill in the rest of the article. Like, a lot of them are just so off base and out of left field. There's no reason to even bother with them because it's not real information. And the real information that you should be looking at are the companies that are setting up departments to manage crypto, the treasuries that are adding crypto to their balance sheet, both
Yep.
corporate and sovereign. Those are the things that we should be looking at because those are the biggest buyers that exist. Retail and the emotional swings of whether tariffs impact Bitcoin's price or not, it's just headlines. It's
Yeah.
meaningless. So I think you're right. I think you're spot on. I think that we haven't even seen the real push yet. And if you think, a lot's happened in the last 8 weeks of his, first 8 weeks in office, imagine what we're going to be talking about 2 years from now. I mean, think about that. I mean, it's going to
Well,
be.
I mean, the fact that we went from, again, I keep bringing this up because it just blows my mind how quickly it ramped up. But our first show was at the end of May of last year. I had to go look at that back up. I was thinking it was June or July, but end of May. And at that time, they had just started talking about Bitcoin. He'd mentioned it a few times. We're like, yeah, but probably not going to become that big a deal. And it's such a short time it did. So again, when you talk about, well, look at what he's done in the first 8 weeks. Imagine what we're going to be talking about a year from now. I think if the only way that doesn't make sense is if you haven't been paying attention since last year. Now you also mentioned an important thing, corporations and whatnot buying up Bitcoin treasury, stuff like that. I know we just heard Rumble this morning, ticker RUM, mentioned something like 17 million, I think, in their Bitcoin in their treasury with Bitcoin, with looking at purchasing more. And that's just the next one. I think ETFs. If we look at ETFs brought in something like $39 billion Bitcoin ETFs in Q4 of last year, according to the numbers, that they reported. And everybody's all up in a holler about, a few billion here, a few billion there over, this last couple of months. But we're almost first quarter down here. And you're looking at first quarter last time being almost 40 billion. We're barely scratching the surface of that on the outflows right now.
Yeah, so the gamification, like we've talked about, has just begun. I was on a really interesting spaces yesterday with Bitwise's team, and they were going through the new ETF that they're launching. Have you heard about this?
Yeah, I think it's the one with the companies that have the Bitcoin treasuries, right?
Yeah, it's at least 1,000 Bitcoin on their corporate balance sheets, and a bunch of other criteria like that. They have to own, their entire value has to at least be 30% derived out of their Bitcoin holdings and
Okay.
things like that. But it's basically like if you're in the club, you're you are changing the playbook. You're doing the Michael Saylor playbook, and you're taking treasury and you're taking all of the cash reserves that you have, and you're putting a significant bet on Bitcoin being a part of that reserve strategy. And 30%. GameStop is obviously a likely candidate, but I think that what's interesting is I was listening to their spaces, and really what intrigues me is if you look at how that ETF is going to be set up, what's the biggest movement catalyst, and what's the largest movement typically found in from a time period perspective? It's at launch. It's when the news comes out that XYZ company, like if GameStop came out today and said, we got 4 billion in cash, we're going to spend $1 billion buying Bitcoin, and we're going to put it on our balance sheet. And let's say that they did that so that they could get included in this ETF basket, right? So there's Bitwise is taking this like minimum bar that now is going to be the prerequisite for volume. And if you believe that Bitcoin adds an advantage financially as a hedge, then you're going to want to own, and you believe Bitcoin is a good asset with growth potential, you're going to want to own this ETF. And
Yeah.
so what's going to be really interesting is that these large companies are going to be looking for new ways to get headlines. Well, the headlines that they are getting by divesting, their cash and putting it into Bitcoin, those headlines are where all the sizzle is. Like that's where everybody gets the most excited.
Yep.
And that's going to be all harnessed in a collective ETF model that's going to allow you to ride constant waves of news and press releases of new companies being added versus trying to pick yourself. And the lag is only going to be 1 quarter. It's going to be adjusted every quarter. And so yeah, I just think that we just scratched the surface as it pertains to what ETF products are going to be available at the end of 2025. And they're exceptionally compelling. And I'm sitting there listening to the spaces for like an hour, and I'm pretty geeking out because it's like you're if you could invest in let's say the United States came out and said, we're going to buy 1 million Bitcoin. Um, if you could invest in that fund, that's what this ETF could be, because it's essentially like a collective treasury of
Yeah.
all these companies that have huge pieces of Bitcoin. That's exceptionally compelling from a potential growth perspective. And then if you start thinking about playing options against the companies that are going to be added and what percentage their new allocation, if Meta comes out and says we're buying a bunch of Bitcoin, and their threshold is they have to have 30% of their available cash in Bitcoin to make the cut, and that number is disproportionately large compared to what the basket already holds in terms of collective Bitcoin, you're going to see this massive trading opportunity between the options and the actual ETF price before that quarterly settlement takes place. So just really fun, exciting new playgrounds to play on that take the volatility of Bitcoin and make it even more volatile.
Yeah, and it's great that you brought that up, because actually I was toying with the idea for the show to be about Bitcoin sentiment being really low while builders continue building on it, and that was actually going to be the title, because again, we're looking at that, right? Every retail is like, oh my God, it's falling. Oh my God, it's got to go down. Oh my God, it's gonna, the top's in, which they've been saying for years now is on this bull market. Every time we move up a couple of percent, the top's in again. I guess if anything, they've been consistent on that, but consistently wrong. But, when we see that, and then we take a look at what really matters, what are companies like Bitwise doing? What are companies like, Strategy doing? What are, these other companies, really, what are they doing? It's like retail's so hyped up on just the price that they're missing what's going on in the background, because it's what's going in that background that ultimately provides the value. And so when we look at that, and so I see this article here with from Sentiment, the company that monitors sentiment and whatnot, whale wallets and all that kind of stuff. And what they said is, let me see here, whales and sharks snap up $381,293,478 worth of Bitcoin in 6 days amid trader panic, according to Sentiment. And so, that's that's about 4,486 Bitcoin. So while retail's freaking out over here and selling, and oh my God, it's topped, big players are like, yeah, you know what, just bring it to me, right? And so again, we talked about some at the beginning of the show there, which is, if you're emotional right now, or if you're a shorter term trader, most likely, guess who's going to be on the other side of your trades as you're selling? It's going to be these whales, these longer term holders.
People who are looking at or have proper cash management protocol. That's really what it amounts to. It's like you don't panic the in the dips unless you don't have cash to buy. That's the way I look at it, at least. And so if you don't have cash to buy, it's because you picked a feeling, and you chose that feeling over math. And what I mean by that is like everybody has a feeling of where the bottom is. There's a part of me that wants to load the boat 79. That's like a number. But then there's a part of me that says, there's a huge key level at 75. And if that level's going to get swept, the liquidity is going to get swept, it's probably going to go to 71. And then so the bottom line is like it's impossible to pick correctly unless you're just lucky. No one can do it over the course of a long period of time with a high degree of certainty. It's impossible. And so when you stop feeling lucky after you've been burned a lot by picking those times, you start wondering, okay, how should I pick the times? And the answer is you should spread your price entries out as much as possible. Now, a lot of people don't like that. Why? Because it requires a lot of patience, and you may have to enter into your position over a very long period of time. But guess what? It doesn't matter if you believe in the thesis of Bitcoin, because the thesis of Bitcoin includes the volatility, and you're going to get a sample of that over that long period of time. So you're going to get the sample of the market that you're willing to be patient to get, and you will also get the sample of the market if you are impatient. And what I mean by that, well, if somebody has, let's say you're late to the Bitcoin game, you've got you want to own one Bitcoin, put you in a very rare club. That's kind of where most of the people that I talk to that have the means to do it, they're like, I got to own one. How do I own one? Okay, let's say you're going to own one. And let's say that one is going to cost you 80 grand right now. And if that 80 grand is more than 20% of your available cash on hand, you should be really slow to enter into that position, because it's a big chunk of your money, right? It's like you've got to be really careful about not picking the wrong time. And what I mean by that is if you're going to enter in 80K into a position and it's a meaningful chunk of money to you, then what happens if you had bought 80K in at 109? What would you be thinking right now? You'd be panicking and probably wanting to sell. But if you had bought $5,000 worth of the 80 at 109, and then you had, the dip had happened, you bought another 5,000 at 102, and bought another 5,000 at 92, then you bought another 5,000 at 82, and you were lucky you got a little 5,000 at 79, you'd have this average price of, call it 85,000 bucks, which is a hell of a lot better than 109.
Yeah.
right?
Yeah,
And so,
exactly.
yeah, so get an average price based upon entering in over multiple position entries, and that's literally the inconvenience of doing that, and the practical nature of being impatient doing that is why we have the company Arch Public. That's we build automated tools that take all of the hard work out of executing those strategies. You set it and forget it, and what you set up then gets executed when the parameters are met. So all of this is, again, I think Chris does a great job in his trading school teaching you how big of an enemy you can be to yourself.
Number
um,
one. Yep.
and impatience. If you feel an itchy trigger finger to get into a position, I promise that's emotion.
Yeah, yeah, and see, and these are absolutely, guys. Listen, I hope you're paying attention to what Mr. Man here is saying, because I'm telling you, it really is. Emotions continue. Everybody comes in, retail. They often come in, they're like, and when they lose, it's the market, it's Wall Street, it's crypto whales, it's always somebody else, right? You're exporting your blame to others when really it's you, right? Your emotions are what you have trouble dealing with. Not having a plan, not having a system, not having tools like Tri-Arch Public has there that can help get you out of those emotions, because it works where you don't have to sit there and look at it. Just do it, close your eyes, go away. Don't open it up for a few months, But those are the things that are going to make the difference, guys, right? Because here's the thing. Everybody thinks, hey, listen, I just need to find the perfect strategy, right? And so here's the truth with most retail traders, right? They go out there, they'll learn a system, and they'll use it for a very short period of time, and then they'll go and they'll use a different system, and then they'll use a different system, and they'll keep buying new systems without ever actually having mastered the first one that they got, or the second one they got, or any of them. And the thing is, it's not the system, right? I mean, you need a system. You have to have a system of some sort, whether that's using tools like Tri-Arch Public has that can help you DCA correctly without your emotional attachment to it, arbitrage, stuff like that. Whether it's, Fibo, we got Fibo following here. He's got his threshold theory. Whatever it happens to be, the system, you have to have it. But beyond that, you absolutely have to understand the part that your emotions play in it, because if you don't get it figured out and you don't understand it, it doesn't matter what system you have. You will never be consistently profitable. You may get lucky here or there, but your emotions will keep you from doing what you need to do to follow the system.
Well, you'll be miserable too the whole time. And that's
Yeah.
the part about trading that will not make you want to pursue it and not keep you actively in love with it. Is if it's really, really hard on you emotionally, you're not playing by a set of rules. What you should be looking at is like, okay, when I go into a trade, I teach my sons this too. It's part of human nature that we think that we're so smart, whether you admit it or not. Subconsciously, we all believe that when we enter a trade, it should only go up from there.
Yeah. From the moment we enter, right?
We picked the exact moment to enter. And what we're forgetting is that with any good tradable asset, with anything that you want to trade, there should be high volatility off of every entry point. It should be a volatile asset. That's where the spread is made. That's how you make money. So to enter into a trade and think that you're not going to have a massive drawdown is naive at its very core. And so in order for you to sleep well, you have to quantify what that drawdown looks like, what you're willing to take, what you're not willing to take. And then you have to quantify what the trade amount needs to be in order to stomach the drawdown against your total net value, in tradable assets. And so there's all these, tricks to where it'll keep you sane. And you'll play these rules that over time, if you set up your risk reward ratios properly and the asset is volatile enough, you win.
Yeah.
Literally, it's that simple. It's like, if you can stay on the horse, which means not selling into the volatility, expecting the drawdown, expecting the volatility, but have done enough research to also trust the volatility back and the base value of the asset that you're buying, and believing in the thesis that it will find its footing again. Like when Bitcoin draws down to me, I think to myself, has anything changed with the protocol? No. Has the adoption curve slowed down? No. Has institutions deemed it to be unusable for practical reasons? No. Yeah. And then I go, okay, so if the price was 109 and there's more of those good truths that are now evident, then these drawdowns are sales. These are the
Yeah.
dips that you dream of so
Their
you can
opportunity.
buy. Yeah, they're opportunities. And that's the way I look at it. That's not investment advice, but that is the way I'm giving you kind of a glimpse into the way I approach Bitcoin specifically. But other things that I see value in long term.
Yeah, and these are great things too. And listen, guys, if you're following me or if you're not following me on Twitter or some of the other social media areas, you should be, because I put together a whole bunch of threads, and I've released a couple of them here over the last few days, talking about misconceptions traders have and why those misconceptions are hurting you versus what you should be doing instead. I dropped one today, I guess about an hour ago, right before the show. And it starts off with: most traders focus on how much money they could make. Tell me if this isn't y'all. They chase big wins, calculate potential profits, and dream of life-changing trades. But here's the harsh truth: potential profit doesn't matter, your risk does. So it's not how much am I going to make, it's how much am I willing to lose. And that's exactly what Tillman's saying here, guys. If you figure out how much you're willing to lose, rather than always focusing on the profit potential, you're going to find yourself a lot better off because you're focusing on the right thing. As I say time and time again, when you're in the markets, trading, investing, it's a game of losing. And the best loser wins, right? He who loses best is going to win, which means you should be focusing more than anything else on your risk management. I've been doing this 30 years. I still to this day work on tweaking my risk management because every little incremental betterment that I can do to that means exponentially more profits in my future. And the only thing we control is how much we lose, guys. We can't control, we can sit there and go, man, this setup looks so perfect. Oh my God, this thing's going to heaven. I cannot wait to be on this rocket ship. Let's go. And it'll turn around and it'll dump below your stop loss. You have no control over which way it goes. You do have control over when the hell you get out. And that's when you get out, if it comes against you, as well as when you get out, when it goes with you. So, be sure you're following along to catch those. I've got a whole bunch of those, probably a few weeks worth that I'll be posting here just about daily, if not daily, for you guys to help get your mindset kind of do it. Because if there's one thing you haven't, hopefully you've noticed, myself, Tillman, Andrew, we're calm as can be. Prices pull back. Everybody else, oh my God, the sky's falling. I remember the Chicken Little thing going, right?
Listen, we're not just calm, we're buyers.
Not just calm, but buyers. Yeah, exactly. Yeah. We're not like freaking out like, oh my God, it's the end. It's the end of the end. And that's really where you want to be if you're in the markets, right? You don't want to be emotional. Even if you're just getting excited because it's going up and you're making money. You don't want to be, if that's what you're looking for, understand that what you're looking for is a dopamine hit. That's gambling.
You should sell at that point because the money's become too important. Yeah, when you start getting giddy about the money you're making, that is literally the time that I start selling, because in my past and riding through multiple cycles of crypto, that's the exact time the market starts retracing. That's when the exuberance, they actually talk about that being the stage in the market. That is the exuberant stage. That's where everybody thinks that we're going to heaven for forever. Valhalla, Moon Lambo, however you want to crypto bro it. But it's one of those things like human emotion is on full display when you're a trader. And that is something that if you aren't aware of, it's gonna bite you, especially because it's like being in a relationship with somebody. me and Chris, we have a good relationship. Let's say we only measured our relationship on the good times.
Yeah.
Is it really a relationship? How deep is it? What happens if we hit a little snafu and the whole relationship dissolves because of an argument over which Cheeto is better, the fiery hot or the regular? Something really stupid. Is that a valuable relationship if it can be destroyed on the back of a Cheeto argument? No, it's not. And trading's the same way. If your strategy can't get you through losing positions with peace, it's not a good strategy. Go back to the drawing board.
Yeah.
It's
No fair weather
not worth.
friends in trading.
Yeah, exactly. Yeah, you need to be able to rest on, like, if you're anybody's a blackjack player. Let's say you get dealt 2 aces and face card on the dealer's a 6. You're splitting those aces 103,000% of the time. Let's say you lose both hands. You're not walking away from the table going, I'm an idiot. Man, I'm stupid. You're walking away going, I'm the most unlucky. That's life. Oh, man, kicked me in the. And that's how your trading strategy should be. It shouldn't be emotionally like, oh, I'm such an idiot. It should be like, I played the best hand and I lost. And, I'll play it that way every single time. And you should almost have an irreverence towards, like, from being undisciplined. You should have like I'm going to stick true to my rules, come hell or high water, and I'm going to have confidence in that. I'm going to walk away. I'm going to celebrate the fact that I stuck to my rules, because that's when you turn losers into winners. If you learn self-discipline by exiting when you've promised yourself you're going to exit, you should celebrate that. That's a win. That's not a loss.
And by the way, that's not just helpful in trading, it's helpful in life. I talk about this all the time. Sometimes people give me a little hard time. Chris, you're a life coach. But the reality of it is, you cannot be one way in one area of your life and something different in another area. Your brain does not allow that, if it's a healthy brain, if it's not, chemically imbalanced, doesn't allow that to happen. So when you're making these good habits as a trader, establishing a plan, following the rules of the plan, consistency, these types of things, this is going to bleed over into every other area of your life. And what you're going to notice is those other areas of your life, you're going to be much happier with. You're going to be much more successful with. You're going to get out of relationships you shouldn't be in. You're going to get, you're going to do better in your job or your business, whatever you happen to be, because you can't help but do that, right? We fight ourselves. Emotions make us human and they're great. But at the end of the day, if we're reacting off our emotions consistently, it makes life a lot tougher. And that's what
we
happens
sell
when you get into
ourselves
trading.
pacifiers all the time. Like, we are notorious for wanting an easy life. And when things are hard, if we can pacify them by lying to ourselves, that's typically the path of least resistance to get it outside, to forget about it. And, dealing with it, addressing it, understanding it is hard. It's painful. It requires you to dig into things that aren't even trading related. Greed, fear, provision, all of the things, like inadequacy. I can tell you, there's nothing that I can spot more than somebody who feels defeated as a trader, because I've been there, where you just feel like you can't make any right decisions, where the market literally is monitoring your computer and it hates you so much that it will deploy price action in the opposite position that you choose every time. I've felt that way before. And that is engineered.
Yeah.
That is the emotion of the face value of the market. So the market is very deceptive. You can't take it at face value. You have to think about it in the opposite way that it's presenting itself to everyone else. So if it's really at face value, just this glorious setup, that should cause you to go, a lot of people see this. A lot. That's not an edge. An edge is when no one sees it.
Yeah. Exactly. If you're, there's something I like to always say, when it comes to retail traders is, here's the reality of it. So most people, most retail, especially nowadays, they find a lot of their information for free online. And then they try and do that. But as I've often said, a lot of that information is half truths or outright lies. And on top of that, it's not even a system, right? It's here's an indicator, here's how to use the indicator, right? So the problem is retail goes out and does this. What's the other thing we know about retail? 90+% of them are out, 90 days, lost everything, usually added more in and lost that too, never to return to the markets. So, my first thought is when I learn something, when I want to do something is what is everybody else doing and are they successful? Because if everybody else is doing this thing and they're not successful, well, then I don't want to do that thing. And I think that's, unfortunately what a lot of people get out there because they go to, influencers and whatnot, and they say, okay, well, how do I trade? How do I invest? And most of these influencers just show them the way that all retail does it, right? The patterns and, and stuff like that. They don't really teach them, why is the market moving the way it does? What would be a better way of understanding it? They just got it this other way. And the reality of it is most retail traders are doing that and most retail traders out of the market. So, kind of look at what's out there, guys, when you're trying to do things and just always approach things with that same mindset. What is everybody doing? What does it seem like everybody's doing? And then once you figure that out, goes, okay, are most people successful with this? And if you're getting a no on that, then you should be doing something else.
And there's a comment in the chat from Andrew says, just buy silver, easy money. I don't know, Andrew, but I follow silver, and I have followed silver for a very long time. And there's a ratio that every silver bug keeps in their back pocket to judge whether silver's a good buy or not. And it's the ratio that it's held against the price of gold since the dawn of time. It's like 17-1 is the average. And we are way past that. And so no one's talking about silver except the hardcore holders that have been believers for a long time. Well, I'm going to tell you, silver isn't going anywhere. Silver is here to stay. Silver is always going to be something that you can trade, buy, sell, store value, all of the above. And in my mind, Andrew's right. It is easy money. Now, what's hard is that you may be sitting on it for the next 10 years. And it may be trending sideways until it finally catches up with gold. But if you have conviction in the longevity of an asset, you see no one talking about it, and it at depressed prices against correlated values that it's been correlated against since the dawn of time. Those are the unsexy type of opportunities that literally, in my experience, have made the most amount of money because the least people, it's the edge that no one's taking but you. And so, I couldn't agree more. And that's a good way to look. That's a good example of what you should be looking at as in terms of assets. Like, when do you accumulate them? When everyone hates them and thinks they are the unsexiest girl at the party, no one wants to date them. And then when you sell them is when everybody thinks that they're the greatest girl at the party and everyone's asking them out. You have to go counter market, right? Counter crowd.
Yeah. And so again, we can just kind of parallel that right there to Bitcoin. If you've been like us and you've been in, for 5+ years, 10 years, whatever, in Bitcoin, you see this, right? You remember back when you got in and how it wasn't a very big thing and how Peter Schiff was multiplied back then. There were a lot more of him back then about how it was, worthless and everything else. I think he's been saying that publicly since 2011 when it was a few bucks. Man, I would hate to be wrong that long. But, when you're looking at that, it's that conviction, do you really believe in what is, and it's not just to believe in it, guys. If you're just trying to believe in something just to believe in it, it's not going to work. You're going to find a way to get out of it. You're going to find an easy way to talk yourself out about that. Okay. But if you can find something to really believe in, you just buy and you keep adding to it, right? And for us, and why we have this show is because, we feel that way about Bitcoin. That doesn't mean that we totally ignore everything else going on in the world and we're not interested in anything else. I mean, there's other things out there. There's other ways, there's different ways this all comes together. But man, oh man, even when I came in here, I think I'm the youngest one from Tillman and Andrew as far as when we came into Bitcoin. Mine was January of 2007. I'd heard about it in 2009, 2010, and I thought, man, that would be great. I think I'm going to mine some. And then life got in the way, and I had my son, and it went off my head until right back around 2000, end of 2016, coming into 2017. But now I've been in there for going on 8 years now. And, my conviction in Bitcoin has never been higher. And it's the thing we've talked about since last year, which is right now, risk adjusted. This is the absolute best time you can get into Bitcoin. Not when we got into it. It was much, much riskier back then. Oh, but Chris and Tillman, it was so much cheaper. Yeah, and significantly greater opportunity to lose that money.
Well, listen, there were times where in the early days where there were fears and the headlines were saying that the exchanges were going to cut off the off ramps, that you couldn't sell it and get money out of it. Think about that risk. Think about when XRP was delisted from all the exchanges. Think about that happening in a permanent nature, like crypto is outlawed, because in the early days, that's what the chatter was. And the regulators didn't know what to do with it, to the point where, like, I knew it wasn't going to get outlawed, because even if it did, it would live. Like, you can't outlaw air. And Bitcoin is like air. It's a virus that has been created, that is a virus to the archaic system of old, and you cannot kill it. Even if the entire world gets EMP'd and we go dormant for 10 years, the second one node gets plugged in, we have the exact same ledger that we left off with, and it runs perfectly going forward, just like it did in the past. Like, it's unkillable. But the headlines sure scared the crap out of you all the time. I mean, it was like the whipsaw of price action. You'd go 90% down in 3 months, 90% down, 95% down. So this is like a dream. We're actually on a pretty smooth cruise ship right now compared to the speedboat that we've all, kind of grown accustomed to in Bitcoin. But look at the headlines. Like, I just got one that popped up. Bank of Russia proposes to allow crypto purchases by select investors.
Yep.
This arms race could get really interesting. It could accelerate this very, very quickly. And there's just not that much supply out there. So when you talk about nation states starting to become favored, getting favorable terms towards Bitcoin, both for their citizens and for themselves, you're talking about a movement that could be parabolic, like a true parabolic move, where price, has a lot to catch. This stored potential value of the network gets realized in a very short period of time. I see a comment. Who knows the project Agent 10 AI and says the AI get all the information about the crypto movement using AI. There's a lot of tools like that out there, Miguel. And I will tell you, specifically meme coins, the smaller the market cap, the more at a disadvantage you are if you aren't using AI and sniping bots to trade with. You can't beat them to the market. There's bots that will, like, you can program them to where, let's say I am watching a certain celebrity for a contract address, right? And that celebrity, like, there's several right now that are huge that have been saying, I'm going to release a contract address to a meme coin and pay attention to me. Or let's say you had this in place before Trump did it, and you kind of had a feeling Trump was going to do it, and you would program essentially this bot to watch Trump's Twitter feed. And you would program the bot to watch for a string of letters and digits that are a contract address. And when that happens, when they tweet that contract address, that bot sees it in a nanosecond,
Yeah.
sends a signal to the wallet, and executes buy orders as fast as it will get filled. And it snipes all the supply. And you have hundreds of snipers doing this, and all the supply gets bought up immediately at ridiculously low prices, and it drives the supply down and the price way up, which draws the retail investors in, because when the price gets driven up, then it starts making all the top 10 charting trending coin lists, and that's when we see it. And
Yeah.
that's when we go, oh, it's up a bunch, let me buy it.
Yep.
You are the exit liquidity for all those snipers. They are selling into every dollar that comes into that coin after they've accumulated that sniped position. So
Yep.
if they're getting such a large portion of supply, the only way this coin will be successful is if those snipers run out of supply before the demand runs out. And that's a really hard thing to pull off. Really,
Yeah,
really hard.
and that's that same idea is what I teach, at the Trading Academy, which is, retail tends to get excited when something's pumped, when there's these big candles that have already happened. The goal is to get in before that pump, and that way you're riding that up, and now you can either hold on or you can get out with profit, and you're not trying to get in at the top there. And the only way you do that is, you get to start understanding how and why markets move the way they do. You're looking for specific kind of entry models that you get based on that. And, of course, that's exactly what we teach, day in and day out. But I found this interesting here. I just saw this pop up on my Twitter feed here. This is from Ryan over there at Bitwise. And so this is the Bitcoin held by governments. And you can see the U.S. is up to with about 198,109. But right behind them is China with 190,000. Now, Fibo brings up the, well, I think that's probably confiscated more than anything else. And I agree, it probably is for the most part on most of that. But we're looking at this because guess what? If these countries decide they want to create a Bitcoin strategic reserve, and they go about it the same way as Trump's, wanting to do it here, which is you start with what you have. And now we've got Senator Loomis coming back in there and resubmitting the Bitcoin Act thing, to purchase 1 million Bitcoin over the next 5 or 10 years or something. I think 5 years, 200,000 Bitcoin a year. And so you start looking at it, and all of a sudden you look here and go, okay, well, China's right there with us. Even the United Kingdom's there at 61,245, and Ukraine, middle of a war, sitting at 46,351. And, I think this kind of puts things in, a little bit more into perspective, because if they're creating a Bitcoin strategic reserve and this goes in there, it's basically the same thing as throwing the wallet out and losing the passcode, basically. It's Bitcoin that's not going to come back in anytime soon. Yeah. So supply it's out of there. Well, it's not coming back in on there for a while.
I hope it's been confiscated, because that means their cost basis is zero. If they have a cost basis, then they're going to be tied to the price, and it's an investment, and they have fear. If they look at this as a way to build a net neutral reserve fund, why wouldn't they just confiscate illicit gains in crypto, shove it all into a crypto reserve, sell all the altcoins at their peaks when they pump, and buy more Bitcoin with them? Like, that would be a really great strategy. And honestly, I'm pretty pleased. There's been so much chaos. Like the fact that Trump tweeted XRP, Solana, and ADA were going to be in the crypto reserve. That was the first tweet that came out about the crypto reserve. Think about that. The first one. Now we're seeing that the rules have been set up where they may get in, but they're going to be selling that stuff to buy more Bitcoin, is essentially what it looks like. And that Bitcoin is going to be overwhelmingly the majority of the coin that's held. That's a driver that other countries are not going to ignore. And so even if we have a hold only policy, it's going to bring other nation states in to have to get Bitcoin, which is, in my opinion, going to be their first knock on the door they're going to make is what illicit companies have a bunch of Bitcoin that we can go seize. That's I think a lot of the countries are going to, yeah. And here's the good news. I'm like you said, I'm confident that once that goes into a strategic reserve, it's going to be held pretty closely, because I think there's going to be some trade imbalances that, if you have Bitcoin, can act as no different than the petro oil agreement did between the nations that were favored in those agreements. So, if you're part of OPEC and you're an oil producing country and you have enough significant oil production, then you get a seat at the table in the world's oil forum and you get voting rights, essentially. I think the exact same structure is going to be found in Bitcoin. And I think it's just going to be like, you either have it or you don't. And if you don't, then you really don't have anything to talk to us about. And if you do, then let's work out some, because that's a lot of counter party risk that can be hedged against, essentially, a lot.
Let me just put out a warning here real quick. You were answering that tweet about Agent 10 AI or whatever. It looks like it's a scam, guys. It's spam at the best. It's spam right now. We just had the exact same tweet by somebody else. I would advise you to stay away from it. If a company decides that this is their way of getting their name out there, is spamming stuff, just understand that's not a very well-run company, and more likely than not, you're going to lose your money. And I'll stand by that 10 times to Tuesday. I tell you guys. I know a lot of retail, they want to get in there, and then they'll go and they'll click links. And next thing you know, they're getting their wallets drained. And just all these
if the message was strong enough, they wouldn't be leeching off of other people's podcasts for their audience. Like, they could establish their own audience. That's the way I would.
Exactly. Well. And y'all really need to pay attention to that. Don't think just because you're trying to get on the newest thing that you just heard about because somebody spammed it in a channel. Be very, 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 very careful about that. And if they're doing that, I would take it as being most likely a scam until proven otherwise, and I would just stay away from it.
We have AI spamming ads about AI. That I think we've reached the other side, my friends. We're doomed. They have taken over the world. They're now advertising to us, and we can't stop them because they will just create a new Gmail account and start spamming all over again.
yeah, exactly. So, it's just a warning there, guys, because I know, a lot of y'all have been in for years and you've made your mistakes prior. But if you're just brand new coming in here, a lot of this crap is really.
Well, let's touch on that. This is valuable information because we've been in the space long enough to have made every mistake, known to man. And I'm telling you right now, I never click on a link. And I mean never. I won't click on a link if my mom sends me a link to click on. It ain't happening.
I don't either.
Tell me the web address and I'll go there myself, is the point.
That's
right. Links are, in my opinion, 95+% of the scams out there. If you click on a link, you are accepting a download. You are downloading something, and that download could have keystroke spyware on it, where it follows every keystroke you have, and then they look at all sorts of stuff, guys. It's crazy. And the sophistication, I mean, you just ask yourself this: if Bybit can get hacked, you can.
You sure as heck can, right? And here's the thing, guys. Even with the web addresses, it can look like it's typed correctly, but it's in like Sanskrit or something, where it's actually a different letter. It just looks almost exactly like it, or pretty, exactly like it. So yeah, I am the exact same way. I don't care if you're somebody I've
Listen,
known
if
for ages.
Coinbase sends me a link in an email, I know I can log into my Coinbase account and that alert should be in there. I don't need to click on the link in the email because 90% of the emails I get from Coinbase aren't from Coinbase. They're from some other,
Exactly.
other address. And I will tell you, yes, I hard typed the address into the URL.
Yeah, and I've never talked about that before. I'm glad you brought it because I do the exact same thing, especially if it's coming via email or a text or something like that.
Well,
I
and
will
here's
take
what
the
I
time to text it out, to type it out.
set up two-factor authentication so that you're always getting a text message when you log into your account, and that way you've logged into the right account. Because if you don't get the text message, you just gave your username and password to somebody else, and I'll bet you $10 to $1 that you're going to get a text message in the next 5 minutes, and you're going to be really glad you've had that 2FA set up. Like there's a lot that can happen in this world that is nefarious and very, very tricky. And emails, specifically, I would stay away from them. If you can't log into a web browser-based account and get the same information that they sent you in that email, I don't know a company that you can't do that, is the point. So if a company says, Tillman, you've got to know something and we're trying to tell you, and they send me an email, well, guess what? I can go to the website, and because I've saved my username and password, it automatically populates, which tells me I'm on the right URL, right? Confirmation as I'm doing it, because it wouldn't populate if I was on the wrong URL. So even if I mistype something, I have protocols to make sure that I don't, because there's people have set up Coinbase with an I before the O instead of the O before, like all sorts of really snazzy stuff out there that people have thought of to try to screw you out of your money. But just go to the website. You have gone there a million times. You've saved it in your browser. Go there, and if your username and password populates, then you know you're at the right spot. And when you log in, there should be an alerts or an email or some sort of page that you can go to and get the same information that you got on that email that had the link in it.
Yeah, exactly. And the same thing goes obviously for your accounts on social media, folks. I'm not even that big. 40 somewhat thousand followers on X, but every day I've got fake accounts out there, and they end up having like sometimes thousands and thousands of followers. I saw Tillman the other day. I told him, man, you have a scammer out there using his old picture on there, and you have to really verify what it is. And if you ever wonder, is Tillman's legit or whatever, he's the only Tillman I follow. So if you go on there, it says, TXWest Capital follows him. Yeah. But again, even with that, it could have somebody else that's TXWest Capital, and, it's like it's a lowercase I or a lowercase L instead of a lowercase I or an uppercase I or something, and it looks kind of the same. But you can also just click on his link under the videos here, to get there as well. Mine as well, Andrew's. But you got to be careful out there, because I had somebody, and I felt really bad for her. At first I was ticked off because the way she came at me it was on Facebook. And she said, oh, he's a scammer, blah, blah. I'm like, whoa, what's this scammy thing? And I talked to her, and she's like, well, you had me send you $2,000 and you were doing blah, blah. And I'm like, what are you talking? And then I said, show me the thing, because I don't do that. Show me so she's sending me these messages, and it's clearly, now she was over across the water over there in the UK or something. No, she was in Czechoslovakia is what it was. The scammer, based on the context and the way in which they were typing, looked Indian. I mean, it was clearly not me. And you guys know me; I'm highly educated, so I'm usually pretty correct on my usage of my spelling and my grammar, because it just drives me nuts not to be. It's my issue, not yours. But yeah, I was looking at it, and it took a while to talk. She was so convinced that I was the one that had done this, and I had contacted her on Signal, the messaging app. I don't contact any of y'all on Signal, guys. I don't do that. And the only place we ever sell anything is through our website or through the, whatever link I may have through our Stripe account that I may post if it's something like a one-time thing or something. But we don't sell through, Telegram or Signal or anything like that. So you just really need to be careful because I mean, it kills me. It breaks my heart. And it's happened a few times over the years. And
Well,
unfortunately,
people
I
have
just
gotten
can't
so
go in there and pay
sophisticated.
all these people, like,
Well,
but
you know that there's vanity address services now. Do you know that, where you can say to you can say generate me a Bitcoin address that has Tillman in the first 7 characters of the thing. Most of them limit you to the first 4 and the last 4 characters,
okay.
but a lot of scammers this is a common thing, and it happens to me all the time, and I know about it, so it's easy for me to spot. But in the old days, the way you'd verify your address, a lot of people would, is they would just go into their wallet and they'd copy and paste from their
Yeah.
wallet. Well, now scammers have gone into your wallet and they've gotten the last 4 digits of your address and the first 4 digits of your address, and they know your balance. So they know you're a high target, right? They know there's enough money to go after. They generate an address that has the same 4 characters on the front and the same 4 on the back. And then they start spamming your address with tiny microtransactions of like, 1 sat. People would then go into their address and they'd copy that, and they would just look at the first 4 and the last 4, and they would think it was their address, and then they would transfer Bitcoin to it, and it was gone forever. So man, the links that these scammers are going to these days, and the long ball that they're willing to play is insane. And the links are where literally 90% of it happens. So if you can just stop clicking links, if any company that you're engaging with is worth their weight in salt, they have a website. Go to the website. That is where you're not getting scammed, right?
Yeah.
But it's one of those things that's like, it makes the industry taste really bad to people who have first gotten involved. And it's worse on the meme coin side than anything. I can't tell you how much money's been lost in people thinking they're buying a certain meme coin, but they're buying a scam coin that has the same name, same profile picture. The only thing different is the contract address. And
Yep.
if you're new, no one knows which is the authentic contract address. And so there's 15 websites that look the same as the original. They all have different contract addresses, and you're stuck going, which one is the one that I want to buy? And a lot of tens of, I'd say billions of dollars have gotten lost in that shuffle.
Stop giving your money to North Korea, folks.
Listen, God only knows where it's going. Yeah, it could very well
But
be North Korea.
yeah, and so again, one of the big themes we've had here on Beards in Bitcoin has been this idea that we're going to get to this point where the reality of it is people are going to have banks are going to be custodying Bitcoin. People aren't going to have their own Bitcoin anymore. And part of that's going to drive that is this exact thing we're talking about. I've been doing this for 7-8 years now. I still get nervous anytime I try and send an address or something. I'm like, I got to send a little bit first, just to make sure I didn't screw it up somewhere. And you know what? The reality of it is most of the people don't want to deal with that. One of the big things we used to push with Bitcoin, as people who love Bitcoin is, hey, you get to be your own bank. Folks, people don't want to be their own bank.
Well, I'm here telling you that I'm a 10-year veteran in the space, and I do not use cold storage as a checking account.
Yeah.
You will make a mistake. I'm just telling you unequivocally, you're going to make a mistake that's going to cost you money if you're trying to use cold storage as a daily, weekly, monthly type thing. Cold storage is meant to be a well
Yes.
that's 10,000 feet deep, that you go and you throw your Bitcoin in and it goes to the bottom, and it's incredibly hard to get out. That is how you should look at cold storage.
Yep.
Anything other than that, you should just find a trusted exchange that's US based, in my opinion, or wherever you're located. you have jurisdiction to pursue them if they steal your money. That's the way I look at it is, do I live in the jurisdiction where their domicile or where they have to be held accountable for their actions? And pick a good one that you trust and put the money that you're going to be moving around, trading, selling in and out of Bitcoin. That's not cold storage. And
Yeah.
trust me when I tell you, even getting cold storage out after a year, 2 years, there's software updates that have to happen. You may have to buy a new, like it's not a fast, reliable process. It's reliable in the fact that the money's at the bottom of the well, but it's not reliable in how long it's going to take you to get to the bottom and get back to the surface to get it, because lots can go wrong. I've had, you can't even believe, like I had on a ledger one time an issue where the software it was outdated, and I couldn't get it out until I updated the software and bought a new hardware device. So what's that, 3 days, and so you kind of have to look at it in the terms by which it was invented and what its primary use case is. It's a vault that is very hard to get in and out of, and that is built to be hard to get in and out of and be very cumbersome in the process.
Exactly. And I think that's a great place to kind of end this today. We've been doing a little over an hour here, so hopefully people have enjoyed it. We went a little bit more toward, helping you understand maybe psychology, emotion a bit here with Bitcoin, different things like that. We talked about trading and, again, emotions and the mental, psychological side of it, and ended here with some things to help keep you safe. So hopefully it's beneficial. It's been beneficial for y'all. Bitcoin itself, the great thing about Bitcoin is we can talk with everything from trading to best practices for security to TradFi involvement, and things like that, and where we see the protocol going, all that kind of stuff. And hopefully that's why you guys are here. You're here to ride the bus with us. It is a short bus. Tillman is the driver. So use the seatbelts,
Egg salad sandwiches for all.
Hey, we got to have some fun, right? Otherwise, life's just too dang short. You don't want to be gone tomorrow and thinking, man, I didn't have fun yesterday, right? So anyway, y'all make sure you're following Tillman, Texas OL 61. There we go. You follow me, TexasWest Capital. You follow Andrew. He may be back next week, AP_abacus. And of course, if you're following Andrew, he specifically, he's got a lot of connections from his TradFi days, still in the TradFi. And so, he tries to post a lot of information as soon as he hears about it, what the different people, Morgan Stanley and Goldman Sachs and all those big banks and whatnot are looking at doing or what they're potentially doing. He's got a pretty great track record. Sometimes things slow up, guys. Sometimes a company says, hey, listen, we're going to do this. And then they drag it out. It happens. But you get a lot of great information there. Tillman will tell you football stories, I'm sure, if you ask him nicely. He's our residential, football guy here. But really, Tillman, amazing bit of history. If you guys don't know, used to run a whole bunch of miners back in the day, probably before most of y'all even heard about Bitcoin. So he's got a great understanding of Bitcoin itself and the protocol itself, as well as, he's got a degree in finance. Again, he does the development at Arch Public. So when he's talking about, listen, here's the issues with wallets and don't click on links and all these things, the man's legit, guys. Pay attention. He's not just some Yahoo pulled out of the dumpster, and said, hey, I said you weren't. I said you weren't. I didn't say you were.
No. I am. That you don't make these mistakes without. Like I've gone into the crypto space not because of the price appreciation potential. I fell in love with Bitcoin because of the network. I love mining. I think it's unbelievable. I think that's the beauty of proof of work, and the collective effort that went on behind the scenes for the last 16 years from the group of people that we refer to as the miners is why we're here today. And so to understand what that incentive risk reward profile epoch cycle looks like, that's what got me into it. And the mistakes that I've made along the way have been because I try everything. I love this market because it teaches me things every single day. And it feels empowering to learn those things. But to learn those things, you have to make mistakes or you have to listen to other people that have. So, I've made those mistakes. I've sent Bitcoin to the wrong address.
Yep.
I've been scammed. I've downloaded bad things by a link that cleared out one of my MetaMask's wallets when I was doing the NFT stuff. Like, I've done all that stuff and I've been left going like, if this is the most secure network on the face of the earth, the problem had to have been with me. And
Yeah.
that's the quest of like, what did I do wrong? And then you find out what you did wrong and you don't do that anymore. And
You
you tell
learn
other
from it.
people
That's right.
not to do that anymore. Yeah. Don't drive with hot coffee without a lid over your crotch in your car. That's a life lesson that you
Especially
should
if you're
all
70 somewhat years old.
listen. If you're any age, I can attest that's a bad idea. When your wife says, "Hey, do you want a lid?" Don't be too proud to say yes. Just say yes. I need a
Take a
lid.
lid. That's right. That's right. All right, guys, we're going to get out of here. As always, remember the only thing you control is how much you lose. So whatever you're doing out there in the markets, make sure that the biggest focus that you do is on your risk management. And other than that, it's getting to understand your emotions and what happens, because that'll just sink you quicker than anything else. We'll be back next Wednesday, as always. I'll be back on Friday. I believe Fibo's going to be with me this Friday, guys. Finally, he's back. He was out for a while, and then he came back, and then his day job, had him actually at the office instead of at home. So it looks like he's finally back this Friday. I'll let you know for sure tomorrow, but I believe he is. So join us there on Friday, same bat time, same bat channel. If you're from over the water somewhere else outside the U.S., understand we had daylight savings time. Didn't save us a damn thing this Sunday. We lost an hour. So if you're like, why the heck was this show on an hour later than usual, or an hour earlier than usual, whatever it is, just know that that's what it is until November now. All right. You guys take care. Tillman, thank you so much for joining in as always, buddy. Looking forward to seeing you and Andrew next week.
See you, Chris.
All right. Take care, everybody.